Hi friends, welcome to my next War and Markets episode. Well, the smile on my face shows that this was a really happy day. But before I start, I must just say a couple of things. One is that when I write this, when I put this video in English, people say, Sir, Hindi mein karo. So I want to tell everybody that I do this video in English, Hindi, and Tamil. So if you're just seeing the English version, just check on my channel. The Hindi version also be there and the Tamil version. That's to clarify. Second, I want to thank a few of the people who gave me feedback. First about a fan noise in my room here. So I've switched off the fan today, and somebody else gave a very good suggestion that please try landscape mode instead of portrait. So I'm doing that also. So thank you. And I do give me feedback on whether this is better. And of course, some people had said, sir, you're talking too slow, and also that your voice is very low. So I'm going to do both talk faster and talk louder. So that's taken away 1 minute of my video. So anyway, today's video is not going to be short because there's a lot of interesting things to discuss. First of all, the happy news, of course, is that the ceasefire has led to a massive 4% rally. And when I say 4%, it's 4% across the board. The Nifty, the mid cap 100, the small cap 100, and the micro cap 250 were all roughly 4% up. So today can be called a 4% day. So from a sector perspective, then any sector which did, all the sectors were in the green, but any sector which did better than 4% is the one you have to really look at as a positive sector, and all the rest negative. So what was the positive sectors? Well, they were realty, auto, consumer durables, and banking. So what is common among all of these? They are all rate sensitives. So clearly, apart from the ceasefire, the other reason for the rally today was also the RBI policy, which was neutral but supportive. They said that we'll be proactive and preemptive. So I think market read that very well, and so rate sensitives have picked up. That apart, some other interesting things from the rally today. Of course, it was broad-based because every sector was in the green. The advanced decline ratio was 3:1, which was all the retail participation was very high. But there are some very interesting facts which come through when you sit and do a deep dive. So first of all, you would have thought that such a massive rally that FIIs would have come back and changed their stance from net sellers to net buyers. No. FIS sold almost net 3,000 crores worth of stocks today, and they were selling 8,000 to 9,000 crores per day in April. They brought it down to 3,000 crores, but they're still net sellers. And the other interesting thing is that if you see the mix of purchases versus sales by FIIs, it's almost 45-55. So 45% of the FII money actually was buying and 55% was selling. That's why the net negative. So clearly all FIIs haven't changed their mind about India even after this ceasefire and the oil price correcting down to the mid 90s. It went as low as 91 Brent crude. I think it's ended at about 95, but they're still not convinced. So that's an interesting thing that we need to analyze, but maybe another day. Today is a day for rejoicing. But let me tell you another surprising thing. That is the DIIs bought only 4,000 crores today. They have been buying 7 to 9,000 crores per day in April. They bought only 4,000 crores. Now, I have been speaking to you about the drying powder of the DIIs, saying because they bought almost 1.5 lakh crore in the month of March. So, given that they're getting only about 35,000 crores in the mutual funds and some money for insurance, we were suspecting that they're drawing down on the cash balance in this. So is this an indication of that? Well, let's not jump to a conclusion because I have another theory about what happened today. That is that morning when this happened, because the RBI policy was slated at 10 to 10:30, DIs were hesitant. And if you see, FIS had built up almost 2.6 lakh short contracts yesterday. So the first part of the rally was a short covering rally because the FIs were caught with their pants down. They didn't anticipate this thing. So immediately the short covering rally, and when the prices shot up, DIs was still sitting and evaluating the RBI policy, what to do. So if you see the Nifty and the Nifty mid cap journey through the day, there was a sharp gap up, short covering, then there was a correction and a sell-off, right? Which I suspect was both DIs and FIs selling off. And then towards the later half, again, there was a pickup rally, right? So clearly DIs, in a way you can say, missed the early bus because they were waiting for the RBI policy, and then they came in and bought. And then they didn't buy that much, only 4,000 crores. They have not used much of their cash. That's because they also want to wait for the earnings season to commit, right? So for the next few days, how the DIs are going to behave, that's going to drive. But then the interesting thing is that the mid cap index I told you about, the large cap index I told you, but if you look at now the small cap index and the micro cap index, they are a continuous up from morning to evening. There is no gap in the middle, no selling. So what this clearly tells you is that retailers today came. So FIS was sold about 3,000 crores, DS bought 4,000 crores, but such a massive 4% rally was a retail driven rally today. And that shows that retailers have been waiting for this good news to go and buy, and today they went and bought like hell, if I may use the word. So today was a case, and if you want to talk about Atmanirbharta, today was a case where I think the retail person today actually drove the rally and not either the FIS or the DIS. So that's good food for thought. And well, is this now, a lot of people asking me, sir, is this now the turnaround? Is this now the start of the end of the bear market and the growth? Well, let's wait. It's a ceasefire. Let's not forget. And at one end of the ceasefire is Mr. Trump. Okay, he is unpredictable. We have to wait. So let's not jump the gun in terms of is it a turnaround. Ceasefire is a massive relief for India, right? The second aspect is that on the other side, Israel is not fully committed in the ceasefire. So while Pakistan has brokered this deal and said it is a complete ceasefire, it's not. Because as we speak now, I hear that Israel has attacked Lebanon today. And Israel has been maintaining that, no, I'm okay with the ceasefire, but exclude Lebanon from it. Now, is Iran acceptable to that? Because I don't think so. Iran's 10-point program said it should stop in Lebanon. So we don't know how that is going to happen. Probably that's why I see that GIFT Nifty slightly in the red now. Anyway, I'm just saying that we have to wait and watch. So, and then if you look at the other aspects, obviously today the volatility index crashed 20% from 25 to 19. So in the evening today, again the rally, you also saw that the put call ratio is in favor of the longs today, and the end of the day there was a lot of long options trading taking place. So clearly the outlook for tomorrow is a positive one, but news flow on the geopolitical front is still to be awaited in terms of that. But I can tell you one thing, that it could be temporary. My view is that when America wants an end to the war, because I think it's proved too costly for them. Gasoline prices up 30%, Trump's popularity rating is going down. They've spent a lot of heavy artillery machinery in fighting low-cost drones, so the cost of the war is also quite high. They've asked $200 billion. So I think that America and Trump are ready to free deal. Now they have to convince Israel to also back off from Lebanon, which may take a bit of time, right? So on that note, like I said, keep a track. So from an investment perspective, right, those who have been following my strategy suggested that buy 1% every day from February 28th onwards. I've been saying this, put 1% of your cash at work. Today would be very, very happy because they bought all the way during the correction, and a 4% rally would means that all that rupee cost averaging would have come to their help. So, but at this point, do you stop that? No, continue that, because like I said, it's a ceasefire. There was a relief rally. It's not a flash in the pan. I'm sure that ultimately the war is going to end, but the nervousness and volatility will be there. So continue your 1%. If you want to increase that 1 to 1.25, I have no objection, but keep buying staggered, and do not forget, right? Keep the portfolio allocation as the same as it was before the war, right? And on final note on the RBI policy, I think it's a very good policy. Government was, like I said just a few minutes before, proactive and preemptive. So I think they've kept the rates constant. They've upped the GDP growth rate for next year. Inflation is slightly trending high, but they're cautious. And I think they've kept everything ready for moving either way as the case may be. So I think, again, a very good RBI policy that should complement the governor for the way they have maintained a balanced approach in this scenario. So thank you, and look forward to meeting you all again on my next War and Markets episode. But like I said, please do give me feedback about this video so that I keep improving the quality of it. Thank you very much, and all the best.